Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment, so let's bring in our next guest. That's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Thanks for having me.
All right, so we're talking Ulta Beauty. Three guys talking about a beauty stock here, and this one's been pretty ugly so far this year, no pun intended, down about 9%, so severely underperforming the market. I saw Estee Lauder got downgraded today. I mean, has the tide turned on this stock a little bit, because it was a big winner, from in 2021 and 2022?
Yeah, I think the tide turned in May of this year on the last earnings report. I mean, they got absolutely crushed on that earnings. I think the stock went from like 480 to 410, something like that. It was a huge, huge move. So yeah, I'd say the tide has turned a little bit. But there's still actually some strong signs that we're seeing here. So first of all, we like to look at the back to school movement. Obviously, not everyone going back to school is wearing makeup, but still, when you get into the teens plus, a lot of them are. And actually, Ulta's the #1 brand among teens at 41%, with Sephora trailing at 28% of favorite brands. So that's obviously a positive sign. And they're actually seeing that, they're positioned to benefit from consumers trading down to their generic brands or their mass market, which is their drugstore brand. So they've got a good range of products from the higher end down to the lower end, and I think that they're benefiting from people tightening up a little bit. They're not the discount brand by any means, but they still have a little bit more to offer in that range. When we look at the data on them specifically, the mentions look pretty good. The mentions are up about, I think it's 28% on a year-over-year basis. That's that blue line there. It's not gangbusters. It's not blowing things out. But it is different than that stock, right? I like to compare the stock price chart, which is the lower one, with the mentions chart, and there's a little bit of a divergence here. You can see that the momentum stalled on mentions right before they missed earnings in a big way, but now it's kind of leveled off, and maybe it's picking up a little bit. I don't think that they're going to surprise to the upside this quarter. I don't think that's going to happen, but I don't think that there's a lot of bad news coming. I think this is probably a little bit more on the neutral side. When we look at the web data, people just going to the Ulta.com or just checking them out, it's about up 5% on a year-over-year basis. And actually, the more interesting stat is that their web visits just passed Sephora's web visits for the first time ever. So they're now the leader between those two when it comes to traffic. And their happiness also just passed Sephora, so by about 2 points. So they're becoming the leader here, and I think it says a lot about their consumers. They have happy consumers. They're very loyal consumers. They've got that Ultimate Rewards program. 41 million people are in on that, so they've got a very sticky membership, a very loyal membership. And another thing is the cosmetics market is growing. I mean, when you look at how much people are spending on cosmetics, it's going to pass $100 billion this year. It's been on a steady uptrend. If you kind of take out the COVID years, those were huge down years. But other than that, it's continuing on a nice little uptrend that it had pre-COVID, and it's only expected to grow. So this is a rising tide lifts all boats kind of situation. I don't think they're going to come out and blow things away and just surprise to the upside. I do think that as a value here, based on what's happened to the stock, this isn't a bad entry point. If it's me, I probably wait until after earnings because we've got a slightly negative score, but it's fairly neutral, and I think a lot of it's priced in.
Yeah, it seems like a common theme, and even in today's show is the discussion about competition, Landon, because on their last conference call, one thing they did talk about is they had promotions from competitors force them to lower their prices to keep market share. And they talked about a 2023 slowdown and adjusting the overall outlook for 2023 because of that. But this company's still growing. It's still profitable. They had a big quarter they beat on earnings, $6.88 a share. Not like they're not profitable. But this stock is sold off hard after those numbers. Is competition just going to eventually take its toll on profitable industries like this one, like it does all over the place, frankly?
Right. I mean, if your margins are high enough, eventually people are going to see that and come in and try to take some of your margins and compete with you. It's very attractive, to be in that industry. And so it's going to lead. It's going to be a bit of a race to the bottom. What you can do to defend against that is to either have a better product or much better branding and marketing. And they've got pretty good of both. So I think they're positioning themselves to defend, but competition's coming. And as things get tighter for consumers, you're always going to be looking to trading down. And so, again, I think they're well positioned for that trade down play. But if it continues, you're eventually going to be having consumers going under Ulta on a trade down. So they've got to be careful there. But I think they're doing all they can. They've got this, the market's growing. I like their positioning. It's just, you're going to have competition coming in. Another thing that I think we can expect to hear about on this call is, the shrinkage factor. They are definitely victims of this theft, and they actually have a new term, ORC, organized retail crime. I think they're just trying to come up with any way of saying, not saying theft, but that's what it is. It's shoplifting and theft. And it's hitting them hard as well. I do think that that's a little bit more priced in. So when they start talking about that, I don't think it's going to be, as bad as some of the other ones we've seen, like with Dick's. But I think a lot of what we're expecting on Ulta is moderate growth. Kind of everything's sort of known right now, and we're not expecting any surprises. If there was a surprise, I'd bet it's going to be on the downside, but I don't think there's going to be a surprise.
Yeah, they matched basically Target's fall from the previous quarter also. They've got that partnership here. Landon, is that going to cause any strain because Target continues to be under pressure and maybe the foot traffic's not there? And do you have an earnings score on this one?
Yeah, I think the Target move is going to hurt them. I mean, all that politicized stuff that Target got into, after what happened with Bud Light, I think that should be in every business school class. Is just stay out of politics, don't get into it. It can only hurt you, and it's hurting Target, which is actually hurting Ulta as well because of the partnership. I think that'll that's going to wash out over time. And it's going to rebound. I think it's more of a blip than a long-term problem. But for as far as earnings score, we're at a -7. Again, if you're within 20 points of zero, we're calling that neutral. So we would have a very, very slight bearish lean, but I'm hands off on this one on the earnings report, maybe selling some premium. But if I'm long term, I'm waiting to after the report, and then I think I can get in on this one. I do like it long term.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us on Ulta. It seems like their data is pretty positive, Kevin, and we've seen that drag down in the stock, underperforming the overall market. How do you want to look at this from the